All right, welcome back, everyone, for another deep dive into what's really happening in the markets. Today's November 8th, 2024. And, well, things are, how should I put this? A little mixed up right now. We've got some trends that are, well, they're pretty fascinating, to say the least. And then we've got some surprises, too. So, let's just jump right in and unpack all of it.
Sounds good to me. It's definitely a bit of a tug of war out there right now, Different sectors pulling in opposite directions, some winning, some not so much. It's going to be interesting to see what's driving these moves.
Okay, so before we get into all of that, let's do a quick rundown of where the major indexes landed yesterday. November 7th, for those who need a reminder, the S&P 500, it ended the day slightly up, 5,973, a gain of about 0.4%. Not bad, not bad. The Dow Jones, on the other hand, barely budged, closed at 43,729. With a teeny tiny 0.02% increase. It's still trying to, catch its breath after all the election craziness.
Yeah, it is kind of reminds me of how I felt the day after, just completely wiped out.
Oh, tell me about it.
But hey, let's move on to the real excitement, the Nasdaq. Now, that was a different story. It surged almost a full percentage point yesterday, closed at 19,269. I mean, that's a pretty noticeable jump, wouldn't you say?
Definitely, definitely. So what's the deal there? What's pushing the Nasdaq up like that?
Well, you can thank those tech giants for that. Apple, Microsoft, the usual suspects, they're just blowing their earnings forecasts out of the water. And it's not just about having the hottest gadgets or software anymore.
Right.
They're really good at adapting and changing,
Mm-hmm.
Figuring out new ways to make money. And they're using all this data in ways we've never seen before.
That's interesting. So they're kind of, staying ahead of the curve?
Exactly. And that's why investors are feeling so confident. That's why the Nasdaq is doing so well.
So while these big companies are having their moment in the sun, what about the smaller companies? How are they doing?
Well, that's where things get a bit more complicated. The Russell 2000, which tracks smaller companies, it actually dipped yesterday. Yeah, about 0.35% down, closing at 2,383. And the main reason for that? Rising interest rates and inflation makes it really tough for them to, borrow money and compete with the big guys.
So it's like the big companies have a tailwind and the smaller ones have a headwind.
Yeah, you could say that.
It's almost like we've got two different stories playing out at the same time.
Two very different stories.
It reminds me of the election, how the Dow seemed to be pointing in one direction,
Right.
and then the actual results went in a completely different direction.
That's a really good point.
So it kind of feels like, Wall Street and Main Street are playing by different rules sometimes.
Absolutely. That's something we see a lot, The stock market can be a bit of a bubble sometimes. It
Yeah.
often reflects global capital flows and, corporate profits,
Right.
which don't always line up with what's happening in people's everyday lives.
Totally. And speaking of things that are shaking things up, I've noticed that our source material keeps bringing up this AI thing. It's everywhere. It's like the word of the year. But is it all just hype, or is there actually something real happening here?
AI is definitely the buzzword du jour. You can't escape it. But it's not just hype. I mean, we're seeing a full-on race to innovate in the tech sector, with all the major players pouring billions into AI research and development.
Oh, billions.
Billions, yeah. And it's not just about making their stocks go up. It's about completely transforming entire industries like healthcare, finance, you name it.
So it's not just about making our phones smarter.
No, it's way bigger than that. It's about reshaping the world around us.
Okay, so AI is changing the game, but what does that mean for someone like me? I mean, I'm no tech expert.
You don't have to be a programmer or anything to, benefit from AI or at least understand it.
Right.
Just think about how it could impact your own work or your industry.
Well, like how?
Could it help you automate those annoying tasks? Could it help you make sense of all the data you have? Could it help you, just get more done in less time?
Interesting. So it's not about becoming a robot. It's about making the robots work for us.
Yeah, that's the idea. Yeah.
Okay, so we've talked about the tech world, but what about those industries that aren't as, cutting edge? Like energy, for example. I noticed our source material mentioned some interesting shifts going on in the energy sector. Can you unpack that a little bit?
Sure. The energy sector is in a really weird place right now.
How so?
Well, on the one hand, you've got this global push for renewable energy. Everyone's trying to, move away from fossil fuel.
Right.
But on the other hand, we're still super reliant on oil and gas, and prices are all over the place because of global events and supply chain issues and all that fun stuff.
So it sounds like energy companies are trying to juggle a lot right now,
Yeah, they're walking a tightrope.
trying to keep everyone happy.
Exactly, and that makes things tricky for investors, too.
Oh, I bet
They're trying to figure out how to make smart decisions in a sector that's, constantly changing.
it's a tough spot to be in for sure. Okay, so let's move on to another tricky situation.
Right.
The Fed. Our source material mentioned that Jerome Powell finally decided to cut interest rates by 25 basis points or 0.25%.
Finally, I was wondering when he'd do that.
So what does this actually mean for, regular people?
Well, cutting interest rates can have a ripple effect across the whole economy.
Like how?
It can make it cheaper to borrow money, for mortgages, car loans, credit cards.
Right.
So maybe you'll have a little more money in your pocket each month and people will be more likely to spend, which gives the economy a little boost.
So it's like a little economic stimulus package.
Kind of, yeah, but like all things in economics, there's a flip side too. Lower interest rates can also lead to inflation.
Meaning?
Meaning the price of everything from groceries to gas could keep going up.
Ugh, not what I wanted to hear.
Yeah, and this can really hit people on fixed incomes hard, like retirees.
Right, because their income stays the same, but everything costs more.
Exactly.
It's like a never-ending balancing act.
It is. And the Fed is under a lot of pressure to find the right balance.
I bet. Okay, so what about Jerome Powell himself? Apparently he had a pretty, how should I put this, a pretty strong response when he was asked if he would step down as Fed chair if Donald Trump asked him to.
Oh, yeah, I saw that. He basically said, nope, not going to happen. I'm going to serve out my full term.
So he's standing his ground.
Totally. He's not letting anyone push him around.
Good for him.
Okay.
Okay, before we get too caught up in U.S. news, let's take a quick look around the globe. Let's start with Europe. How are things looking across the pond?
It's a mixed bag, to be honest.
In what way?
Some countries are recovering pretty well from the pandemic and all the other craziness.
Yeah.
But others are still lagging behind, It really depends on where you look.
So some good news, some bad news?
Pretty much.
And how about Asia? Anything interesting happening over there?
Asia's another mixed bag, but China is definitely the one to watch.
Ooh. What's going on in China?
Well, the government's been cracking down on all these big tech companies.
Actually,
And that's causing a lot of uncertainty and, making waves across the whole region.
So while the Nasdaq is celebrating all things tech, China's doing the opposite.
Yeah, it's like two completely different worlds.
It really shows you how connected everything is,
Right.
One country's decisions can impact the whole globe.
No doubt about it. We're all in this together, whether we like it or not.
All right, so we've covered a lot of ground here, from market performance to the power of tech, the energy transition, global trends, even a little bit of political drama. But now let's bring it all back to you, our listener. What does all this mean for your personal financial decisions? Stick around for part 2, where we'll dive into the implications of these market trends and try to offer some practical insights to help you navigate this crazy financial world we live in. Don't go anywhere.
And we're back, ready to continue our deep dive into the markets.
We covered a lot in that first part. Tech doing its thing, small businesses struggling, the energy sector trying to find its footing. But now I want to bring it all back down to earth, you know? Like, how does all this actually affect, people like us?
That's a great question, and it's really what we're all about here. We want to make this stuff relatable, help people understand what's going on and what it all means for their lives.
Exactly. So let's start with Jerome Powell and the Fed. They finally decided to lower interest rates, 25 basis points, or 0.25%.
Took them long enough.
So what does this actually mean for, the average person?
Well, it's kind of a mixed bag, to be honest.
How so?
On one hand, lower interest rates mean it's cheaper to borrow money.
So mortgages, car loans, that kind of thing.
Exactly. So that could put a little more money back in your pocket each month, maybe give the economy a little boost.
Okay, so that's the good news. But you said mixed bag, so what's the bad news?
Well, lower interest rates can also fuel inflation.
Meaning?
Meaning the price of, everything keeps going up.
Yeah. Not the groceries.
Especially the groceries.
Ugh, that's tough.
It is, and it's especially hard on people living on fixed incomes, like retirees.
Yeah, their income stays the same, but everything costs more.
It's a real challenge for them.
Okay, so it's not all sunshine and roses. There are some trade-offs.
There always are. It's Economics 101.
Right. Speaking of Economics 101, remember how we talked about that disconnect between Wall Street and Main Street?
Yeah, how the stock market can be in its own little world.
Exactly. So how do we avoid getting caught up in that hype?
That's the million-dollar question, isn't it?
It is.
I think the most important thing is to remember that the stock market is just one piece of the puzzle.
So it's not the whole story.
Not even close. It can be influenced by all sorts of things, global events, investor psychology, even just plain old rumors.
Okay, so how do we stay grounded then? How do we make smart decisions without getting swept up in all the noise?
Diversify, diversify, diversify.
I've heard that one before.
It's the golden rule for a reason.
So don't put all your eggs in one basket.
Exactly. Spread the love, spread the risk.
Okay, so what does that look like in practice?
Well, don't just invest in stocks. Look at other things too. Real estate, bonds, maybe even some alternative investments.
Like gold?
Gold, silver, things that have intrinsic value.
Okay, so mix it up a bit.
Exactly. Don't be afraid to think outside the box.
All right, now let's circle back to AI.
Everyone's favorite topic.
It seems like it's going to change everything.
Hmm.
But how do we actually, harness that power?
You don't need to become a programmer or anything.
Yeah.
Just start thinking about how AI can impact your own work, your own industry.
Like specific example.
Are there tasks you do that could be automated? Could you use AI to analyze data or, just be more productive?
So it's about finding ways to integrate AI into what we're already doing.
Exactly. Make it work for you.
I like that. Okay, what about the energy sector? It's going through this big transformation, but how does that affect, our everyday lives?
It's all about making informed choices, right?
Like what?
Think about your budget, your lifestyle, your values.
So should I be running out to buy an electric car?
Maybe, maybe not. It depends on your situation.
What about solar panels?
Again, it depends.
So do your research, weigh the pros and cons.
Exactly, and don't feel pressured to jump on every trend.
Okay, that makes sense. Now for a little curveball, what about cryptocurrencies? Bitcoin, Ethereum, they seem to be doing their own thing.
Crypto is a wild ride, that's for sure.
So should we be paying attention to it?
It's definitely worth keeping an eye on, but it's also super volatile, It's high risk, high reward.
So maybe not the best place for my retirement savings?
Probably not unless you have a really high risk tolerance.
Right. Okay, so we've talked about interest rates, the stock market, AI, energy, even crypto. It's a lot to take in.
It is. It's a lot.
But before we wrap things up in part 3,
Yeah.
is there anything else we should keep in mind?
Stay informed, stay engaged.
Meaning,
Don't just skim the headlines. Actually do your research.
dig deeper.
Exactly. Think critically. Form your own opinions.
Don't just take someone else's word for it.
Right. The more informed you are, the better decisions you'll make.
Okay, that's great advice. We'll be back in a moment with our final thoughts and some questions to ponder, so don't go anywhere. All right, welcome back for the final stretch of our market deep dive. We've crunched the numbers, we've talked tech, we even dipped our toes into that crazy world of crypto. But now I want to step back and look ahead, What does the future hold? What should we be getting ready for?
Well, predicting the future is always a risky business. But we can look at the trends, see where things are headed.
Okay, so what's on your radar? What are the big things we should be watching out for?
One thing that's already having a huge impact, and it's only going to get bigger, is automation. And AI, of course.
Yeah, that seems to be the big buzzword these days.
It is, and for good reason. It's not just about robots taking our jobs. It's about, redefining what work even means.
So are we all going to be sitting around sipping lemonade while the robots do everything?
Not exactly, but it does mean that the skills that are in demand are going to change.
Okay, so what skills should we be focusing on?
Things that machines can't do as well as humans, Creativity, critical thinking, problem solving, emotional intelligence.
So those soft skills are becoming more important than ever.
Exactly. They're becoming the essential skills.
Makes sense. Okay, so what about the bigger picture? The global economy, where do you see things going?
It's a mixed bag, to be honest. We've got some serious challenges ahead. Climate change, resource scarcity, geopolitical tensions, inequality.
Yeah, it's a lot.
It is, but there's also a lot of hope,
Right.
We're seeing incredible innovation, global collaboration, people coming together to solve these problems.
So it's like we're at a crossroads.
Exactly. The decisions we make today will determine what tomorrow looks like.
It's a bit daunting, but also exciting, right?
It is. We have the power to shape the future.
Okay, so before we wrap things up, what's the one key takeaway you want our listeners to remember?
Stay engaged. Stay informed. Don't be a passive observer. Don't just accept what you see on the surface.
Question everything.
Exactly. Do your research, think critically, form your own opinions.
Don't just blindly follow the crowd.
Exactly. Be an active participant in shaping your own future.
That's great advice. I think we all need to hear that sometimes. All right, that's all the time we have for today, but this isn't the end of the conversation. We want to hear from you. What are your thoughts on all of this? What are you excited about? What are you worried about? Hit us up on social media. Let's keep the conversation going.
Thanks for joining us on this deep dive. Until next time, stay curious and keep exploring.